Hey, Salvador Briggman here. Welcome back to the Crowdfunding Demystified podcast. On this show, I love to debunk myths. I love to deconstruct and understand the specifics of a crowdfunding campaign, bring inspirational stories to you, as well as tell you about growing and rising trends. So this is I viewed it almost as like my public duty, right? Which is to be aware and to have my fingers on the pulse when it comes to a new industry. And if there is an opportunity that I am getting excited about and I see is blowing up, I think it's almost my public service to introduce you to that. Because otherwise, how do you find out about it, right? How do you know about the insider stuff that's happening unless someone actually shares it with you, right? So that's kind of the genesis of today's podcast episode, in which I kind of want to go a little bit deeper on this topic of equity crowdfunding. And the reason is that it is blowing up, man. It's getting to be huge. I am not joking here. I will post maybe some stats or a graphic in the actual the podcast description here, but this thing is going to take off. I'm telling you, this is like Kickstarter 2010, 2009. It's the early days, but we just are starting to hit a little bit of that hockey stick growth that pretty much is the beginning of any major takeover or any major explosion. Whenever you have that little exponential growth that you see happening, you should know something is coming. A wave it's almost like it's cresting. It's beginning to crest, and it's going to be really fun times for anyone who knows how to surf, or really fun times for body surfing, right? If you don't know what's coming though, it's going to be whoa, what is happening, right? And you're caught in the middle of the wave. This is going to be so exciting for you. I promise. It's going to be a massive opportunity. So I'm talking about equity crowdfunding, but I'm also talking about WeFunder. So today I brought on the fundraising guru at WeFunder, the Director of Fundraising, Jonny, who has come on the show to share some really cool statistics with you, as well as share with you a new regulation that's going into effect on the 15th of this month. So this is going to happen very soon. First of all, the limits are going to be raised upwards of $5 million under regulation crowdfunding. You can now raise money using regulation crowdfunding upwards of $5 million. In addition, there's now a test the waters period, which is super cool. You hear about that a little bit in a second. You'll learn about the explosion, which WeFunder is seeing, unprecedented levels of investing activity on their platform. And this is all backed by statistics. This is also what I'm beginning to see in the industry. And kind of when I first got involved in 2012, I assumed this would happen at some point. And I think now it's finally coming to fruition. So I also wrote a book on this called Equity Crowdfunding Explained. And something tells me I'm going to have to do some updating of that book in the next couple of years here. But I'm going to talk a little bit about that at the end of the podcast here. But let's just get right into it. Let's get into some of the things that you should know when it comes to this industry, the huge opportunity that so many people are not even talking about when it comes to regulation crowdfunding. It is coming up right after this. This podcast episode is sponsored by The Gadget Flow. The Gadget Flow reaches over 28 million people, and they've been around since 2012. They are Indiegogo and Kickstarter experts. They featured over 5,000 crowdfunding campaigns, and if you have a technology or design campaign, it is a great platform to generate awareness and get backers. You can check them out at thegadgetflow.com/submit and list your project today. Jonny, welcome to the show.
Thanks so much, Sal. Good to be here.
Man, I saw your post on LinkedIn. This thing is skyrocketing with you guys. You've been seeing tons of investment volume. It's insane.
Yeah, that's right. We've been growing really quickly over the last year. I think investment crowdfunding as a sector has been taking off, and WeFunder is kind of the number one biggest player in that space. So it's been a really exciting few months. We're about 5x bigger than this time last year.
5x, geez.
Mm-hmm. Yeah, and there's some law changes going live in a couple of weeks, which hopefully we'll get a chance to talk a little bit more about, and that's going to accelerate the growth even faster. So it's really exciting time for WeFunder.
How long have you been working there at the company?
3 years now. Before that, was working for a nonprofit called Kiva.org, which is also in crowdfunding for small businesses.
I love Kiva. I actually give money through Kiva, yeah.
Yeah, very, very cool nonprofit. I led their US team there for 7 years. And yeah, been kind of running growth at WeFunder for the last 3 years, and it's been a really exciting ride, and it's about to get a lot more exciting.
So how has this year compared with your previous 2 years working at WeFunder?
I think the growth is just really starting to come quickly now. We made a number of product changes. So previously, If you were raising equity capital on WeFunder, we couldn't group individual investors to one line on your cap table, but now we can, and that's a game changer, which just made it a lot more attractive to high quality founders. So getting that product change done and others really helped accelerate the growth. I think the pandemic honestly helped accelerate the growth because a lot of founders were finding it harder to raise capital than previously. Mm-hmm. So then they were coming to WeFunder as an interesting alternative option. And then, like I say, in 2021, with this law change that goes live on March 15th, that's basically going to increase the amount that founders can raise on WeFunder from $1 million, where it is today, to $5 million on March 15th. And so the number of founders that we're going to see, applying and raising capital through the platform is going to go through the roof.
Now, when it comes to this previous year, I mean, I'm looking at the graph that you posted here, and this looks almost like exponential growth. Is that how you'd characterize it?
Yeah, I'm not a mathematician. I studied history, so I don't really know the definition of exponential growth. But certainly, I mean, the growth was kind of, steady but not explosive for a number of years. And then in the last 12 months, I think for those reasons that I just mentioned, the product changes and the pandemic, we have seen the growth massively accelerate. It certainly feels exponential from where I'm sitting.
And this is like 15 million a month and like 20 million I see. Or is that quarterly or monthly, or do you have any sense on that?
That was in January. And February was strong again. I'm not sure. I think it's March 1st today, so I'm not sure the exact numbers for February yet. But yeah, it's been growing very quickly.
And that's basically people that are investing on the platform, right?
Yeah, that's right. So mostly equity, some debt as well, but mostly equity investments in startups. Just like any angel investor would invest in the seed round of a startup, but we're letting anyone be an angel investor. You don't have to be accredited anymore. Mm-hmm. You can make an angel investment in a startup on WeFunder for $100 in a few minutes. It's awesome.
Now, when it comes to this, are these mainly regulation crowdfunding campaigns, or do you also do other regulations on the site?
Yeah, vast majority is regulation crowdfunding. We also do some regulation A, where you can now raise up to 75 million. And then if a founder maxes out the Reg CF limit, which currently is 1.07 million, soon will be 5 million, then we can open up a Regulation D 506C round on top of that, and they can keep raising from accredited investors. So Immersed is a company that raised 2 million on WeFunder last year, basically $1 million in Reg CF and $1 million in Reg D. Grow Gurus, same thing. So we certainly do some Reg D and Reg A, but the majority is Reg CF.
And how long are these campaigns that people are running for a regulation crowdfunding campaign?
Yeah, average is 3 or 4 months. The most fun ones are where startups are raising $1 million in a week. And on the long ends, you can keep it open for a year if you want to, just kind of gradually raising money. But obviously that's less than ideal. And certainly the average is about 3 or 4 months.
Okay, but you could technically leave this thing open for a year is what you're saying?
Yeah, you could.
Interesting. Is there any reason why you would recommend having like a 3 to 4 month launch period over just keeping the thing open for an entire year?
Well, I think maybe a couple of reasons. One is if you can kind of concentrate it, then the deadline, breeds a sense of urgency, so you can get investors to actually commit. Whereas if you don't have that deadline, then it's harder to get someone to pull the trigger. And the other, obviously, if you're a startup, hopefully over the course of a year, your valuation's increasing. So ideally, you want to run a campaign in a short amount of time on a valuation of, let's say, 5 million, and then come back and raise more money in 6 months, 12 months time on a valuation of 10 million.
Better valuation, yeah.
Exactly.
Makes a lot of sense. So when it comes to doing these campaigns, I think the vast majority of people aren't really aware that this is out there, but also they don't even know really where to get started. So when you kind of have those numbers, like you're throwing out, someone raised $1 million in a week or whatever, mm-hmm. where are those people coming from? Like, are they regular investors on your platform? Is this done with the founder's social network, social media ads? Like, where are these people coming from?
You mean how are those founders raising that amount of money?
Yeah, like where are the investors discovering them?
Got it. So about 2/3 of investment volume on WeFunder is coming from first-time investors on the platform, i.e., that's basically people that the founder or the marketing efforts around the campaign are bringing to invest in that company. And about 1/3 is coming from existing WeFunder investors making second, third, fourth, 24th investments. So, if you're raising 300 grand and WeFunder, maybe you bring 200K and we bring 100K. So I say that to say we'll certainly help the average founder, raise more money than they would have done if they weren't raising on WeFunder. But we're not going to do the whole thing, and it definitely, takes effort, and you got to drive it and build momentum on the campaign, as with any crowdfunding, right?
Keep going there.
I was just going to say, in terms of where that 200K comes from, some of that is from angel investors, some of that is friends and family, some of that is customers. If you're a consumer-facing business with a loyal customer base, you can now promote the offering to them. Your listeners probably know this already, but with regulation crowdfunding, it allows you to do two cool things. One is you can publicly promote the offering. So you can put it on Facebook. You can send an email blast to your customers. And then secondly, you can raise from unaccredited investors as well as accredited investors. So now, rather than just 5% of the population being able to invest, 100% of the population can invest. And so through all those ways, we're helping founders to raise more money from their own network, and that helps them get to that 200K. And then, as I say, on average, WeFunder investors are going to bring another 100K on top of that.
When it comes to the vehicle that they're investing in, I know that you have this thing called CrowdSafe, right? And there's also other types of ways you can structure it. What's kind of the most common one that most founders are using?
Yeah, so about 90% of what we do is equity and 10% is debt. And the debt is either a revenue share based loan or a simple loan that you would get from a bank with a fixed interest rate and a 5-year term or whatever it is. And then on the 90% of equity, it roughly breaks down a third between price rounds, where you're assigning a valuation to the company, and then convertible notes, which are more common with kind of earlier stage startups, and then safes as well. Which is an instrument that Y Combinator popularized a few years back. We actually don't use a crowd safe anymore. We use a regular Y Combinator post money safe. But that's an instrument that basically it converts to equity at a future price round. So it's basically the same types of investment contracts that startups are normally raising on. If they're raising from angel investors or doing a friends and family round and raising through Reg D. But then we're just taking those investment instruments and putting them up on WeFunder and enabling people to raise from unaccredited investors and publicly promote it in a Reg CF campaign.
One of the questions I've got, I did a YouTube video on you guys, and one of the questions I was getting is am I not directly investing in a company? I don't understand this, because most people buy a stock, right? And they're like, okay, I own this percentage share of the company, right? Mm-hmm. This is more of like an IPO, and also in the startup stage. What are they actually getting? Just to make it more tangible.
So if it's a price round, then they are getting shares in the company. So it is just as you would be buying shares in Starbucks on the public stock market. If it's a revenue share, which is a type of loan, then you're essentially making a loan to the company, and they're committing to pay you back with an interest rate. And then this with safes and convertible notes, you're essentially getting future equity in the company. So you're getting essentially
it's like reserving interest, kind of.
Yeah. It's just you don't know exactly how much that investment is going to be worth until it converts into equity, which it does at a subsequent price round. So it's a little complicated. It's complicated further by the fact that with a convertible note, it's technically a loan, but that loan then converts to equity at the next price rounds. That's why it's called a convertible note, convertible debt.
And that's different than the safe, right? Because the safe is equity.
That's different to a safe. Yeah. Well, a convertible note will become equity as well. When people invest in convertible notes, they're essentially making an equity investment. It's just technically legally structured as a loan until it converts into equity at the next price round. I guess stepping back, both safes and convertible notes are very, very common instruments for funding early stage startups in a seed round. The companies coming out of Y Combinator, the most prestigious accelerator in the world, they're raising on safes, and angel investors are investing in safes. So we use the YC Safe, we use the Cooley convertible note. Cooley, one of the most well-respected law firms in Silicon Valley. So these are very, very common instruments, and essentially, for all intents and purposes, it's an equity investment.
Yeah.
It's just kind of, it doesn't formally convert into equity until the company raises again on a price round where the company is valued at a certain amount by investors in the next round.
Okay, yeah, it makes a lot of sense. And the only reason I ask you these things, I think it's important to understand there are a lot of like fancy finance terms that are difficult to kind of wrap your head around, right? So I really appreciate you kind of detailing that a tiny bit there.
We also have great FAQs on the WeFunder website for investors, and we try to talk about this stuff in kind of clear layman terms. I think one of the things with, like, normally this applies to founders, but I think here it can apply to investors too. Normally when a founder is raising capital, I think, the VCs that they're talking to might be trying to pull the wool over their eyes a little bit, because, that helps them kind of maintain a power dynamic. And so using a lot of terms and almost trying to obfuscate. Whereas at WeFunder, we are really committed to try to, make it as clear as possible, use simple language, both for founders so they know exactly what they're getting into, but then also for the retail investors that are funding them.
Yeah, definitely. So basically, when you're doing one of these campaigns, is this something that you're going to be doing when you're already an existing company, or can you do it even if you're in like the pre-revenue stage of a startup?
Yeah, you can certainly do it pre-revenue. I would say, it's probably going to be harder for you to raise more money if you're, very, very early. Obviously, there it depends on the sector, right? So you might have a biotech company that's going through FDA approval on a new drug, and that they've been working on it for years. They've made a ton of progress, but they're still pre-revenue. Yeah. So for them, maybe they can raise $1 million. Whereas if you're, a consumer-facing app and you're, which should be then quite easy to roll out an MVP and start to get traction, but you haven't done that yet, I think that's going to be a lot harder to persuade investors that, they should part with their hard-earned cash to invest in you. But, it depends, right? Like if Elon Musk was to launch a company on WeFunder tomorrow, on the day he incorporates the company, he could raise $5 million in a day because it's Elon Musk. So, or
really Travis Kalanick when he did his cloud kitchens thing, right?
Yeah, exactly. And obviously that's an extreme example, but if you're someone that has a very strong network of people that really believe in you, then obviously that's going to help you to run a more successful WeFunder campaign.
Yeah, definitely. If you have that street cred and management team, then people are investing. And honestly, that's exactly how Y Combinator is a lot of the companies, right, are pre-revenue. So they're really judging the founders more so based on their lineage and based on their achievements in the past. And like, are they going to continue that kind of?
Yeah. And I think usually that out of the Y Combinator accelerator program, right there, by that point, they usually have some traction. I watched, YC Demo Day recently, and every company has a chart, right, with like, that's up and to the right and kind of demonstrating their traction. And that's what they're trying to kind of sell investors on. So, it definitely, obviously, the more traction you have, the more revenue you have, and the faster growth you have, the more successful you're going to be on WeFunder. But it isn't an absolute kind of prerequisite for success.
One of the common things with Kickstarter, Indiegogo, that type of crowdfunding campaign is a pre-launch, right? And how a pre-launch can bring a lot of funding in the first few days. Does this exist for WeFunder, and how does that change given the whole filing of Form C, not allowed to disclose until then kind of thing?
Yeah. So that's a good question that actually is very relevant right now with these law changes. So over the last few years, how we did that was we filed a Form C, which, as you mentioned, is what historically you've had to do before you can publicly promote a Reg CF campaign. And then when you filed the Form C, we then usually had like a 2 or 3 week period when it was in private mode, which is kind of the pre-launch that you're talking about. And then you go public, and by the time you go public, you've already raised from people that are close to you, and you've already kind of prepped it so it comes out the gate with a big bang on the first day of the public launch. So that's how we did it historically. But going forward with these new rule changes that are going live on March 15th, there's this thing called testing the waters, where now founders can start promoting the raise even before they have filed a Form C. And so rather than having to wait for financials, because to file a Form C, if you're raising more than 250K, you need 2 years of GAAP financials that have been reviewed by an independent CPA. So now you're going to be able to file a to start promoting a campaign and start to get expressions of interest from investors even before you filed a Form C. So companies and founders would just be able to start basically running the campaign and marketing the company and the investment kind of sooner, and then kind of file the Form C later. So I think this kind of
that's going to be a game changer. That's exactly what Reg A Plus was doing,
Exactly. Yeah.
Yeah, I think that's going to be huge, honestly. And Agreed. That was the big thing, is that if you're not able to disclose you're raising money, it's so much harder, right, to gather interest and get 100%. Like an explosion before you go live.
100%. And this is how investment crowdfunding works in the UK as well, where I'm from. Crowdcube, Cedars, two big platforms.
Y'all are ahead of us.
Yeah, seriously. And there's tax advantages as well for investors investing in startups. So who ever thought that the UK would be beating America on entrepreneurial endeavor? But the US is catching up, especially with these new laws. I think the US is catching up on the equity crowdfunding side.
When it comes to these financials, if you're doing like, let's just say a pre-money raise, would you just then have no financials, or like what does this really look like when you're getting your financials looked at?
Yeah, you can certainly do that testing the waters without any requirements on the financial side, and then before you close on the money, you do need to file a Form C, and that Form C will have financials associated with it. But up until that point, you don't need to disclose financials. And obviously, you might want, if the financials are good, right, then you might want to include those financials on the campaign page, but you're not required to.
So you could technically, with pretty minimal risk, do a test the waters campaign. Are there any legal requirements like that you have to go through before you do the test the waters?
It's a good question. I don't think so. I mean, there's some things that you can and can't say, which our system and products will kind of walk you through. But yeah, it basically is massively going to lower the barrier to entry. And also I think, help, because there's a couple of examples I've seen, right, where it's like a founder, I really want to help. And so they go ahead and do all the work and file a Form C and get financials done and launch the campaign. But, it doesn't quite work out. And so then, essentially it's unsuccessful. The money goes back to investors. The founders kind of wasted their time. And this is going to prevent that from happening because, post March 15th, that founder would have tried to test the waters and, there wouldn't have been the demand and they wouldn't have had to waste their time and money on accountant fees. So I think it's going to lower the barrier to entry, but also help prevent some people from wasting their time if there's not actually going to be investor demand for the offering.
Yeah, that makes a lot of sense. When it comes to the people that are investing on your platform, do you have any stats or thoughts on the average amount that people are investing in on WeFunder?
Yeah, the mean amount is $1,000, and the median is $250.
Okay, $250 median and then $1,000 mean. And I assume that would also be based on the connection to the founder. If they are a normal investor, angel investor, connected with the founder, they're probably going to be investing closer to $1,000. But if it's like a stranger, maybe around $250.
Yeah, that's probably generally the case. We have a lot of accredited investors and angel investors that are writing 25K, 50K checks. And then we have a lot of, customers that are writing $100 checks and everywhere in between. We had a founder, Josh from Vamper, who raised $500,000 on WeFunder on his first campaign. He then went on, he just closed another $1 million on his second campaign. But on his first campaign, he connected to a VC in his sector through the WeFunder campaign and raised $500,000 outside the platform through that. So, sometimes you can be connecting to institutional investors that invest even more off the platform. But it's a wide range.
Are you looking for help with the fulfillment side of your rewards on Kickstarter, Indiegogo, or any other crowdfunding website? Fulfillrite is literally the gold standard when it comes to crowdfunding reward fulfillment. These guys will help you ship out your products, your packages, your orders to all of your customers and your backers They've been working in this industry for a really long time. I totally vouch for their services, and they'll even do things like answer simple questions for you on fulfillment and shipping and figuring out how to get your products into the hands of your customers in the easiest way possible. If you're interested in learning more about them, you can go to fulfillright.com or crowdcrux.com/fulfillright, and that will take you to them. Again, that is FULFILLRITE.com. Very interesting. If I'm a founder and I'm thinking about running one of these campaigns, and there are a bunch of different other platforms that are out there, like there's Start Engine, there's Republic, Seed Invest, a bunch of other ones. How would you say that you differ from some of these other platforms?
Yeah, so I think one is size. So if you look at RegCF market share from the last quarter, WeFunder was at 41%, and then Start Engine was number 2 and 28%. And then Republic was number 3 on 14%. So WeFunder was 3 times bigger than Republic. And then the fourth biggest platform, I think, was maybe Net Capital, around 5%. So really there's only 3 platforms of any real size. And then between WeFunder, Republic, and Start Engine, I think our product is very nice. We actually just did a front-end redesign of our campaign pages,
I think
looks awesome. We saw a 30% lift in conversion, which was unbelievable. And I've been through the checkout flow on WeFunder, and I've been through it on Start Engine, and for me it is kind of night and day, like how easy we make it for people to invest. So that's another component. I think our team is excellent. I mean, if you're considering between platforms, I'd say chat with me and chat with our team, and obviously you're going to be building a relationship with us. We're going to be helping you a lot and putting together the campaign page, running the campaign, subsequently helping you grow the business. So I think like the relationships are going to be an important piece. We're the cheapest platform as well. We are a B Corp and a public benefit corporation.
I love that. Yeah, that's so cool.
So those are some of the reasons.
That's similar to Kickstarter structure as well. I think they're a public benefit corporation.
Yeah, they are a B Corp as well. Yeah, you're right.
Yeah, really interesting. When it comes to doing a campaign, a lot of these founders that I meet need marketing help. Do you guys kind of recommend companies to help, or do you do it at all yourself? What are your thoughts on the marketing side?
Yeah, I'll say kind of 3 things to that. Firstly, we market every campaign on WeFunder, and we basically apply the same rules to every campaign. So, for example, once you get to 50K, we send you an email blast to our entire investor base as a new company that just launched. We have you on the Explore page, and there's an algorithm that ranks companies in that. Once you pass 100K, we pay for Facebook ads that we run for you. So there's some marketing that we do to try to help you raise. And when I say we bring, 1/3 of the money on the campaign, that's where that's coming from. The second piece is then we do provide fundraising strategy and support for every founder that we work with. We have a team of people that does that. That's, I would say, more around the strategizing side. We have some awesome guides as well on, hey, these are all the different tactics that you could do. These are some blog posts that founders have written on what worked for them, etc. And then to your point, like if a founder really wants to go big and work with a marketing agency and have a lot of support in the execution, then there are a number of folks we might recommend. Give a shout out to the Aurora project, Christian Aurora and his team based in Miami. Very, very strong marketing agency when it comes to running RegCF campaigns. So we have a preferred partnership with them.
Awesome. And when it comes to doing these different projects, so you guys obviously help a lot on the email side, the Facebook side. For people that want to dip their toes into digital marketing, right? And when it comes to running Facebook ads themselves, do you have any tips for them on how to do that, or what you found to work well with getting people to invest as a first-time investor there?
Yeah, I mean, so to step back a little, one thing, and this I think is a little different to Kickstarter, and maybe actually something that differentiates us certainly from Start Engine. We don't really love it if founders are paying 20 cents in ads to raise $1 of investment volume. That's a pretty expensive way to raise capital. So generally, we prefer it. Like Envel just raised 1.7 million on WeFunder, fintech company, WeFunder.com/Envel. They didn't spend $1 on ads, right? So we much prefer that kind of paradigm. Now, if a company is consumer facing and they're selling, let's say, designer bags for $299 a pop, then sure, okay, maybe it makes sense to spend some money on ads to recruit investors, because those investors can also become customers and drop $300 on a bag, and so the economics work. So we're certainly not universally opposed to it, but if a founder can raise $1 million without spending any money on ads, so much the better. If they do go down that ad street, then some principles we've seen. Obviously, retargeting is we've seen it have a higher ROAS than prospecting. So getting those pixels set up is very important. Obviously, kind of standard rules when it comes to advertising. Run multiple variants and optimize on where you're seeing the biggest clicks and conversions. One thing that's interesting is that we've seen basically a higher ROAS on ads the more dollars are in the campaign. And when you have the deadline on the campaign, we have a countdown timer with seconds that are ticking down in the last few days of the campaign, which I think really helps.
Urgency, yeah.
Exactly. And so, you're going to have a higher ROAS at the end of the campaign. But then, you kind of want to spend money on ads to build momentum earlier on in the campaign. So there's this kind of tough balance to strike between do you spend money on ads early on to build momentum to get you higher up the algorithm, or do you keep your powder dry and spend it towards the end of the campaign when it will have a higher ROAS? So some of the things, and we're obviously, when I say kind of fundraising strategy, these are the kind of things that we're trying to help founders think through, in the calls that our team has with them. And then if they want an agency to run the Facebook ads for them, then we'll refer them to someone that will do that.
Makes sense. When I'm thinking about investment, let's just say like a VC firm, right? They obviously have a very specific strategy where they're betting on a bunch of different companies, and like one of them is going to make up their portfolio returns. Same for angel investor, like they're betting on a bunch of different companies. With these kinds of investors, do you find that they're investing for socially good reasons because they like the founder and believe in their career, because of the ROI potential of the company? What do you usually think is the reason that these retail investors are taking up these?
That's a great question. I mean, one of the things I love about this democratic approach to raising capital for startups, right, where everyone has a vote, as in a political democracy, but now as applied to financing startups, versus like banks writing the checks or institutional VCs writing the checks only, is that everyone gets to assert their own different preferences and trade-offs, right? Like I invested in Chattanooga FC, which is a soccer club. They raised $900,000 on WeFunder.
I saw that.
Yeah, really cool campaign. I invested $125 because I thought it was really cool to be an owner of a soccer club. I live in Tennessee now, so I'm an owner of a soccer club in my home state. Right, I don't care at all about whether my $125 turns into $250 or goes to zero. I just think it's cool that my name's on their jersey. So with my $125, I wanted to vote as an individual citizen in this democracy. I wanted to cast that vote. But if someone wants to invest $10K in Atom Limbs, who are building the world's first mind-controlled bionic arm, that's probably more of a like classic angel investment where that person hopes that company goes big, maybe IPOs one day and that $10,000 turns into $1 million. So I think there's like a wide variety of motivations. And one of the things I think is cool to your question on kind of portfolio diversification and, VCs, and you invest in a bunch and hopefully one goes big and that returns the fund, we're lowering the barrier to entry. So I chatted with an angel investor in Nashville the other day. He had an exit, made some money, and then was making a few angel checks. And I think he invested $100K in 3 companies, right? And all 3 of those were struggling. And that's like maybe his allocation of angel investment capital gone, because, that 3 companies go to zero is not that unlikely. Whereas on WeFunder, if he could have spread that 100K around 20 investments of 5K each, he has a much more diverse portfolio, which means he's much more likely to, kind of not have that situation where all 3 go to zero. And so we're lowering the barrier to entry and enabling more people that want to get into angel investing to build a more diversified portfolio, rather than having to put all of their 25K of angel investment capital on one bet.
Yeah. I mean, it sounds like a dumb approach to me to put everything just in like 3 companies.
But right now, normally, right, if it's like, it's $30K to get into a round, then that kind of
then you
forces
got
your
it then.
hand.
Yeah.
Right.
Makes a lot of sense. One of the other questions I had there, you were talking about like voting, right? And almost being able to vote with your dollars.
Right.
What kind of rights do people have when they invest? Is there a lead investor or something like that, or how does that work?
Yeah, we rolled out lead investors last year, which was another one of the big product changes that I mentioned that I think have really catalyzed our growth over the last 12 months. And so, as an investor, if you're an equity investor, obviously with that you don't get votes, but if you're an equity investor in WeFunder, then you do have voting rights. You just proxy those to the lead investor. So the lead investor votes for your shares. And so, from your perspective, you actually have representation, which I think is different. That's another advantage, I think, of WeFunder versus Republican Start Engine. But on the lead investor side, or on the founder side, in the event of a corporate action, a vote, they just need to collect one signature from the lead investor. And so the founder, it's logistically, administratively easier for the founder, but on the investor side, they have representation, albeit through the lead investor. So I think this kind of product change we've made with lead investors is actually significant improvement now for both founders and investors. And again, one of the reasons we've been growing so quickly recently.
Mm-hmm. Interesting. So I have a couple more questions here. I mean, I think it's golden that we get just the opportunity to talk with you, right? And your insights here. So I'd be remiss if we didn't cover some of these. So one of the things I've noticed is, I wrote a book on real estate crowdfunding back when it was first getting started, and Fundrise was just first getting started, and like CrowdStreet and all these guys. Do you see this as something, regulation crowdfunding, being applied to real estate at all?
Yeah, it's an interesting question. So regulation crowdfunding can't be used to fund investment companies. And so oftentimes in real estate, the way that investments are structured are through investment funds. And so...
Well, for like an individual property, I mean.
Yeah, so the majority of real estate investments haven't been a good fit with WeFunder for those legal reasons. Republic, actually, one of our competitors, have been getting into real estate more. I think they're normally structuring it through Reg A, which is how they're getting around that. When there's an operating business, an operating component to the real estate deal, then we have had those on WeFunder. But for straight kind of real estate plays, I think both from a kind of strategy and brand perspective, we're more focused on startups than real estate as a company.
Yeah.
And also from the legal reason of not being able to invest in investment companies through Reg CF, we've kind of steered away from it. And I honestly don't really see that changing anytime soon, at least for us.
Makes sense. Okay. The other question I had is, when it comes to investing and it comes to like, finance, I think a lot of the finance guys are really behind on the marketing front, right? And there are so many different marketing tools that are out there now, whether that's doing webinars or doing Facebook bots or texting to, enter some kind of an autoresponder sequence. Do you have any thoughts on, are these like really new techniques you're not yet applying, or are webinars going to be a thing, you think, at any point in time when it comes to investors?
Yeah, absolutely. We think webinars are awesome because they just enable investors to get so much more rich information than what they can read on a page, right? If I see a founder talking for 5 minutes and answering tough questions for 5 minutes on their business, I have much better sense of them and this investment opportunity than if I read the pitch deck and a bunch of information on a page. So I think webinars are going to be they already are very common on WeFunder campaigns, and I think that's going to become more and more common. And then those webinars, you can put them on LinkedIn or social media as well as
I think page. I mean, I'm surprised there isn't even more push on LinkedIn as a way to begin to get more attention to these folks. Facebook ads obviously is great, but LinkedIn seems to me like it'd be a pretty good fit with you guys, right?
Yeah, absolutely. Most founders are using LinkedIn kind of organically. We haven't seen a great ROAS on LinkedIn ads. I think a lot of companies using it for recruiting, and so I think that pushes up
prices,
CPAs. Yeah, and so I think we haven't seen too much traction on LinkedIn ads. Maybe that will change over time. But another product change actually on the webinars, every company on the WeFunder Explore page in the near future is going to have an expert interview panel. where that founder is interviewed by experts in their sector for 10, 15 minutes. So if you're a biotech founder, then like every investor will be able to see that founder
that
answering questions from experts in that sector. So that's another really cool product change we've made recently.
That is really interesting. Yeah, I didn't know about that. That sounds pretty cutting edge, and it can really help, I think, land a lot of peace of mind, particularly if someone doesn't have a lot of experience, right?
Exactly, yeah. And for us, like getting interviewed by experts in that sector is a lot more valuable than, I don't know anything about biotech, right? So if I was to interview a biotech founder, it would only be pretty superficial. So, to say the least.
Wasn't my best subject in school.
Yeah, exactly. Flunked out of biology, but so trying to find experts and go deeper, and the lead investor piece is another piece of this, right? So now we're having like awesome angel investors become lead investors, and we just rolled out a product feature where users on WeFunder can now follow lead investors. And so imagine this is like a dream, but imagine like Elon Musk or Eli Gill were lead investors on WeFunder, and you could see which companies they're leading on the platform and follow them and get notified when their next deal goes live. So that's
I think it's obviously those guys are pretty awesome. To me, I think what's interesting is when some of the bigger social media influencers like Gary Vee and stuff would get more involved there. That's to me just incredible opportunity.
We've definitely had kind of celebrities as well. Like Iggy Pop was the lead investor in Detroit City FC. Bill Nye, the science guy, was the lead investor in the American Ultimate Disc League. So, and there's some really really cool ones in the pipeline right now. So
that's awesome.
And obviously, I think kind of partly what you're getting at. Then, if that influencer then shares the campaign, and they're like, I invested in this company, I believe in it, I invested in it, then they share it. They can then help to make that raise successful, and then make the company successful as well.
Totally. So I guess I have one more final question for you, but before we do, is there anything that you want to share directly with the audience in terms of any new announcements or anything you want them to be aware of?
I don't think so. We already covered the 5 million cap. I think if you're a founder and you're looking at raising 50K to 5 million in equity or debt capital, then please do consider WeFunder. You can go to wefunder.com/raise and learn more. Our FAQs are very good as well, but it's very easy to start a company application, and then our team will reach out and we'll jump on a call and explore a fit. And then on the investor side, as we've said, anyone can be an angel investor in startups that you think are cool, founders you believe in, causes you care about. Anyone can be an investor on WeFunder for $100 in a few minutes. Our tagline is angel investing for everyone. And so, you can become an angel investor for $100 and actually like do this. It's very easy to do. So yeah, those would be my two kind of CTAs, I guess.
So my last question for you here is this like basically the new IPO? Like you think of an IPO, initial public offering, right, to a world of investors and going on the stock market. But this is kind of like an IPO, right? You're basically offering ownership in the company for the first time to the public.
Yeah, exactly. I think you could see it as that. Another
almost like a mini IPO kind of. Yeah,
exactly. Another thing we say is the stock market for startups, right? I think like one big difference is obviously size. Like these rounds are kind of the average round on WeFunder right now is 350K. I think that's going to increase with the 5 million cap, but let's say it increases to let's say it doubles to 700K, right? It's still a tiny amount compared to a typical IPO. And the other thing is just reporting requirements. So if you IPO, you got to publicly report, and that's very, very onerous, right? Significant ongoing like financial and legal reporting requirements, which are very cumbersome and not a good fit at all for a startup. But if you're doing a WeFunder campaign, a Reg CF campaign, the reporting requirements are very, very light. Those are a couple of differences.
As a follow-up, I know that some other platforms are starting on like secondary markets. Is that something that's going to be in your future?
Yeah, absolutely. We definitely want to give investors the opportunity to sell shares on the secondary market.
Trade them, yeah.
there's a 1-year lockup. After you buy shares in RegCF, you can't sell them again for a year per the law. But after that year, yes, like we want to give investors the opportunity to have liquidity on these investments. You got to be careful, right? Because I think one of the challenges with the stock market is that CEOs are enslaved by quarterly earnings reports, and as an early stage startup that's trying to think long term, the last thing you want to do is be kind of worried about kind of quarterly share price fluctuations.
Yeah, definitely.
So there's also kind of a lack of liquidity right now, but yeah, over the next few months and years, we'll certainly be investing in the secondary market, and I think building that in a very kind of strategic and hopefully intelligent way.
Very exciting. I appreciate you so much, man, for coming on the show. I got to make it down to Nashville one of these days after COVID and everything. I hear it's a beautiful city.
We'll hit up those honky tonks once everyone's vaccinated.
Awesome, dude. Thanks for coming on. Appreciate it, and good luck with your success.
Thanks so much, Sal. You too, man.
Thank you for listening to this episode of the Crowdfunding Demystified podcast. My name is Salvador Briggman, and it is my duty, it is my mission to bring useful advice, techniques, strategies, tactics, a war chest of resources and tools, and people that you can really depend on in a new industry, which is crowdfunding, Kickstarter, Indiegogo, equity crowdfunding, how to launch a new product and a new business. That's what my life work really has been around. And, I got started in the industry in 2012, and I really was interested in equity crowdfunding at first, honestly, because the Jobs Act had just been passed in 2012. I was in university at George Washington University, and I was so excited about this new heyday, right, when it comes to doing these mini IPOs. But that kind of was delayed, that regulation. It wasn't going super well, so I kind of changed my focus more to Kickstarter, Indiegogo, which obviously took off really well and has been amazing. And I wrote the book, The Kickstarter Launch Formula. I've written a ton of other books, right, in the niche and stuff like that. So it's been really cool. But I've been waiting for many, many years for this wave to finally crest. And I'm telling you, it is happening. Mark my words, 2021, 2022, 2023, this is going to be the heyday for equity crowdfunding, and it's going to even grow more into the future, particularly as we get into new things like institutional investors getting involved, portfolio management. There's going to be so much secondary markets. Like, this is going to be an entirely new industry. It's basically a mini IPO. And if you want to get in on the ground floor of this growing industry, number one, go and check out my book, Equity Crowdfunding Explained. It's all laid out there for you. You can check it out on Audible if you want to at crowdcrux.com/equity audio. That is crowdcrux.com/equity audio, crowdcrux.com/equity audio. In addition, I'd love to share with you a resource when it comes to WeFunder. So they have this really great give 2,500, get 2,500 campaign going on. So I'm going to include a link in the description. If you want to receive free money, like, why not, right? Sounds pretty awesome to me. So if you're interested in getting started and trying out WeFunder, you can do that in the link in the description. And finally, if you are interested in running one of these campaigns, get in touch. I'll include some links in the description. This is really, to me, like going to be a massive boom for entrepreneurs, for new investors. Even if you're a pre-revenue company, this is going to be something that's super exciting. You do have to be willing to work a little bit. You do have to have a little bit of a budget when it comes to your marketing and these things. But I'm so excited, and I'm looking forward to working with a lot of more coaching students and a lot of more clients on this particular segment of equity crowdfunding. So be sure to reach out to me if you are interested, and that sounds like something that could maybe fit well with your business or your startup. That being said, thank you for tuning in. As always, go and listen to some of the other episodes we got out there. I also have a YouTube channel if you have yet to explore that. I got a blog, crowdcrux.com. We also have a ton of other great resources for you there. The best thing to me is just being able to surround yourself with cool people, being able to hear from some of these founder success stories. Also, of course, taking away some nuggets of gold, right, when it comes to what works and what doesn't with crowdfunding. But at the end of the day, you got to keep yourself busy. You got to keep yourself excited on the right roadmap. And listening to a podcast like this, to me, is one of the best ways to come into contact with people that are in the trenches right now. They're doing it. They're kicking ass. They're taking names. And you can kind of feed off of that energy and get excited about your project. I hope you enjoyed. My name is Sal, and I will see you next time.